Hello everyone, how's everyone doing? I hope everyone's having a nice day. Today we're going to be speaking about order flow and how we can start to put pieces together to start to shape an idea about order flow. I know I haven't made a video in a while, and I thought that it would be a good idea to get back into making videos with a proper presentation, unlike I usually do, where I usually just screen record my Notion notes and talk about them in a very unstructured way. And I think this way would be a better way for me to get out my ideas as well as help people watching to kind of start to guide them on how they can start to make their own ideas. So, information should not be considered as an offer or enticement to buy, sell, or trade. So, this is the E-mini NASDAQ futures chart. This is the March 2025 contract on the daily time frame. As you can see, this is from around the beginning of 2024 December to where we are right now currently, which is 18th of February. I want to take your attention to this piece of price action right here, this region price here. Notice price rejecting off of this area once, twice. And the third time, we run through it, we notice the little wick here, which starts to use the previous resistance as support to take us higher into the weekly wick consequent encroachment. A couple of things that I want to point out before we get into these specifics is that you can't predict whether an array is going to hold as we move into it. You need to wait for further evidence that supports the idea of the array being held. For example, as we can see, as price initially runs into this unfilled wick here, we get a big rejection of it. The next objective that you would place price to meet would be the top of this candle's wick. Why this candle's wick? Because we have an imbalance here that price will gravitate towards as internal liquidity. As price starts to move into internal liquidity, we see that price rejects initially, returns back higher, takes this intermediate term high, and then starts to drop lower, giving us a bearish breaker. We have high, low, high, high. Then we have this displacement here, which was created off of moving into this numeric opening gap and the mitigation range of the quadrant. There we have displacement lower, inversing this gap here, and then from there you can start to shape this rejection block here as strong liquidity. We understood that this array was going to hold because this candle here abruptly inverts this one. After that, when price reached one more time into the unfilled wick and started to reject higher, you would expect it to reach into a premium array, which is this bearish breaker fair value gap, which, as you can see, held without having to reach into a more premium level as the numeric opening gap here is. After that, we have a third move into the unfilled wick. Before I move on to the next slide, I want to point out here how you can how you can sense the shift of order flow as we start to move higher to premium arrays off of the direction of this. If we were to continue with bearish order flow as we did here and here, and then take on this high, you'd expect this gap here to hold and this mitigation block, which was created on the run higher into this gap here, to hold as well. But what do we see? As price moves into unfilled wick, we inverse the discounted array, which is a bearish fair value gap here, and then it moves into this premium array, which is this small imbalance here. As price moves into this array, you wait. For one day, you don't do anything. You set a condition. You say, if this day closes above, this candle is low here, then you can start to anticipate that this short-term high here will get taken. If we do close below the high of this candle here, you can start to anticipate that this small gap here will get filled. And then once you're at this gap here, you start to shape more scenarios like this one that we had here. Anyway, after we had this kind of close above this high, we started to anticipate this high here because order flow told us that we are starting to shift bullish. This gap here would have been respected if order flow wanted to remain bearish. This mitigation block here would have not been breached through its consequent encroachment if we were to remain bearish. We reach higher one more time into this new week opening gap. Before I move on, let's move into the next slide where I want you to keep your attention into this price reading here. Notice kind of the ping-ponging backwards. We have the bearish array tapped into, bullish array tapped into, and then the bearish one. Bullish, bearish, bullish, and then from here we have another bearish array tapped into, but a more premium one. From here, you start to lose confidence in bearish arrays, because if price was really bearish, it would have moved either off of taking this high or off of this gap here, or the consequent encroachment of this mitigation block here. It would have not had such a bullish reaction off of this unfilled wick here that it would take us to a premium level, more specifically the mitigation range of a quadrant. As we went lower, the time where we started to reject off of this, we started to push through this mitigation block, notice we also moved into a rejection block that was held once before, which was also a movement off of a bullish breaker. And as we know, bullish breakers are basically engulfed order blocks. And this whole move lower here also becomes a propulsion block. More specifically and more narrowed down, they're rejected off of the rejection block, but this is also more bullish support. Moving back into the bigger picture, I want to take your attention into this area here. Keep your eye on the breaker creation as soup, and I have a previous video talking about how a breaker being created, in this example, bearish breaker being created, being treated as a soup is a sign of order flow not aligning with whatever the array, which in this case the breaker, is lining up with. I learned this from economics. Credits go to. Basically, I'm going to word it in an easier way to understand. A bearish breaker in bullish order flow is a bullish turtle soup. A bullish breaker in bearish order flow is a bearish turtle soup. Let's move into the 4-hour time frame so we can get a more in-depth look on how this move here down. And the reason why it's significant is because as this time, similar to the previous time where we went into this new week opening gap here, which is 16 December 24, we had a similar scenario to this one here. But instead of rejecting off of this unfilled wick and inversing gaps here and this mitigation block here, we treated a breaker creation as a soup. If order flow was truly bearish, the creation of this breaker, which would be taking the slow here, would have displaced through it, inversing this fair value gap here, and pushing through and reaching towards this low. Reminder, a breaker is a high, low, higher high, lower low. You'd expect it to reach back into the breaker fair value gap and continue lower, or in severely bearish cases, you would just see it drop lower and the gap as a breakaway and refer back to it once we've switched overflow and are ready to start moving back higher. Anyway, let's move into the 4-hour time. So this is the drop here after we had the rejection once, twice, 3 times on the lower time frame of this new corporate gap, which mind you all happened on one day. And this day could be considered as a consolidation day. And after we had this drop here, notice this low is also in a fair value gap. Once we dropped lower, we consequently took low resistance liquidity. Many retail traders were in profits riding this uptrend. Price's objective was to take out external liquidity and fulfill internal liquidity, filling this gap here, as well as filling this gap here, reclaiming it, and then touching back into another time here, and then rejecting higher output. But we will talk about that later. As price displaces lower, takes this low, many traders who saw this as a rejection from the opening gap and a move lower through this lower low here, or sorry, this low here creating a lower low, would have seen this as a sign to start selling the next retracement higher off of the rally. But what you should do here is understand that nothing is confirmed until we see how we react off of this fair value gap. The way that we see how we react off of the fair value gap is obviously through waiting, but also this can be confirmed through lower time frame conditions. As you can see, as price runs below this breaker, we would not want to see a gap that was just inversed get reclaimed. As you can see, as we run through the breaker low, we have the lower low, and then price immediately reclaims it, and then starts to use this gap here as a reclaimed bullish gap, driving us higher, higher, and filling this new opening gap here, which was left open by the displacement that was caused from the reaction of this new opening gap. I'll say that one more time. As price dropped lower through this breaker low and created the breaker, you would not want to see price reclaim it immediately if you were anticipating this to be a bearish scenario. You would want to see price inverse it, and continue to use this gap here as an inversion as support, bringing us lower towards these relatively equal lows here and this short-term low here, which ultimately we do get to this low, but as you can see, we have a big rejection off of it, and we start to reclaim this gap here and use it as resistance to go up and fill this new opening gap. Going back to this slide here, I want to mention something that I think is worth mentioning, which is basically on a daily time frame or on a bigger time scope or whatever, the weekly, the yearly, the 6-month, the monthly, doesn't matter. You need to have patience. It's important to have patience in scenarios where bouncing through a race, and recently throughout these past 2 months, this is a lot of what we have been doing, and it's practically what we have been doing on a high time frame for basically the past 3 months. So moving back into what happened after the breaker creation, which was failed and treated as a swoop, The events after that are very important as they display a smaller scenario happening in a bigger scenario. You'll understand what I mean. Let's focus on this region of price action here. After we had the break equation soup, we noticed that this fair value gap here held. Through the help of the 4-hour reclaimed gap that we spoke about previously, we delivered toward this new opening gap here. Notice, price finds resistance off of this gap here, and then we close lower. Next week opens up, we have a big open lower here, and we create a new week opening gap here. And this here opens, moves lower into the unfilled wick, SMTs with ES, this low here, and then trades higher, filling the opening gap. Notice, we still did not close below this gap here. Bullish order flow is still being respected. The problem is, bearish order flow is also being respected. We have to use context, and we have to use raise to confirm which one is going to hold throughout conditions. What does this remind you of as well? We're opening up here, right here, bouncing between them, once, twice, same situation here. This was just happening on bigger length. Anyway, after we had the unfilled wick moved into an SMT with the slope, we rejected off of the bullish new opening gap here once, twice, 3 times before we had a new week opening gap, a new week opening gap created here. Notice price moves into the bearish new week opening gap, rejects all of it, moves lower into a bullish array, back into the bearish array, back into a bullish array, back into a bearish array, into a bullish array, back into a bearish array, back into a bullish array, back into a bearish array, where then we finally have this new week opening gap here. Obviously, within the 4 days that all of this ping-ponging is going on, you wouldn't want to be trading at all. You could catch some trades, but it's the wiser, the safer decision to stay off of the charts when you don't really have a grasp on where price is trying to head towards. Before I move into the next slide, ask yourself, why do I have this engineered buy side here highlighted? I will get into it once we reach the next slide. Zooming in, we're still on the data time frame. This is just a more zoomed picture of the region that we were just talking about. After we had the ping-ponging around this new opening gap here and this big new opening gap here, we started to get a sense of direction once we had this engineer buy side, or this is on hindsight obviously, but it was just buy side when we first saw it. I started to see that, oh, okay, I see what's happening here. Buy side is being engineered at these very relatively equal highs as support and resistance traders are shorting this high here. There's lots of liquidity, lots of stop losses at this high. Price is likely to go towards this high just because there is more liquidity there. Now, we can then use the idea that after this buy side was engineered, a new bullish array was created, and we had the initiation of the buy program, which took us towards the engineered buy side through this new opening gap. It's different when you have an objective that you can move towards, and when you have very relatively highs, it becomes a very strong drawn liquidity, unlike just external liquidity. Now, let's talk let's talk more about the initiation of the buy program that occurred. Obviously, the buy program did not get initiated from this tab here, this tab here, this tab here, this tab here, but it was initiated through this tab here. Actually, I want to take that back, and I want to say that it was initiated from here for the reasons that we looked on before our time frame. But it was not initiated through here, or even through here, because smart money was still trying to accumulate buy side. And when it successfully accumulated buy side over here, we started to get the grasp that, okay, through probably the next bullish array, it will start to try to meet the engineered buy side, as there's also the here. Anyway, moving into the lower time frame. As we had those engineered highs, price runs low back into the numeric opening gap of 10th of February, or sorry, of 3rd of February, moves into a discount, into this fair value gap here, and what do you see here? We have a high, low, high, lower, low. What does that look like? Didn't we have the same exact on low time frame over here, where this anticipated bearish soup, or sorry, anticipated bearish breaker gets turtle souped by a program initiated toward the buy side? You see how that works? If engineered buy side here was going to be left alone, and we were going to react off of this fair value gap here as a bearish fair value gap, price would have 100% pushed through this low and reached for lower sell side, such as this low here and this low here. But as we can see, as price went below this low, it remained up above the low, or sorry, above the high of this candle here, and rejected off of this low, giving us a turtle soup, which started to take us higher. Now, once we move further into it, you can see how we started to switch more over to the bullish side. As we inversed this bearish gap here, we accumulated a bunch, and I believe that this was for time purposes. And obviously, we don't have access to exactly when things are going to happen, but it's clear that it was just a bunch of accumulation. And through the use of this gap here, into the points 2 times, 3 times, 4 times, and then from there we rejected lower into the breaker for value. Let me explain. Through this high, low, high, low, low, bearish breaker turned bullish turtle soup, we also have a low, high, lower low, giving us a sweep on this low, which then initiates to create a higher high. And consequently, where does this higher high end up being? At the engineered buy side. It's fascinating how these things line up like this. Anyway, through the creation of this bullish breaker now, we could have started to set a condition. If the bearish breaker gets created and displaced through, then we have a bearish scenario. But in the scenario we had here, where we had the bearish breaker get souped instead of being displaced through, we started to shade that, okay, this might become a bullish breaker. And that's where you can start to anticipate the breaker. You can start to anticipate that this high is going to be taken through the formation of the breaker, which is basically the move engulfing this entire move lower here. Through that, we have the breaker for value gap, which is discounted to, and we had a nested low here as well. And we can apply the same concept. We have a low, high, lower low, then we have a higher high here. We have a breaker for value gap here, which happens to be at 9 p.m., 9:30, where this push lower here occurred. And then from there, we started to trade higher towards the engineered buy side and then through the numeric opening gap that we were referencing this entire time and anticipating it to be inversed. And we got the confirmation that it was going to be inversed through this turtle soup, which is where the program was initiated and confirmed. I hope that all made sense. If it didn't, go back and watch it. I might have to rewatch it too. After we had this push through the engineering buy side, we liquidated all the people that were shorting. Here now we have buy orders with us. This is where smart money buys. And then from here, we start to see that price pushes higher, uses the new opening gap here as support, and then we push higher towards the weekly consequent encroachment. Leaving us off where we are now. I hope that made sense to everyone. I hope everyone learned something. And if you guys have any suggestions, if you guys like the new slideshow template, instead of me going over my Notion journal and speaking over there, please do let me know. I will continue making these slideshows if you guys like them. And yes, it's honestly amazing to me. I can't put it into words. It feels seeing these stuff connect and work together to form a bigger picture. The scenario that we had that occurred within these two candles here did not occur in this time, nor did it happen this time. But when it happens and we can see it, we can start to frame a trade off of it. I'd like to go into trading view really quickly and show you how the trade that you could have got actually would have went. So here we are in trading view, and if you recall, this was the slide that we were just previously on, and this is where we had the buy program initiated after we souped this low here, and we started to move higher for this breaker for value gap. We just counted, and from here we had this reversal that brought us higher. Let's move into the 1 hour and take a closer look at what's happened here. Notice London session of this day was a trend lower, and then we had a reversal through New York session. If anyone has watched core content from ICT, in one of the earlier videos, he says to go in your chart and line out London, New York AM, New York PM, and see how they all contrast each other. In this case, where we have London is a move lower, and then New York is a reversal, you have to incorporate arrays within this. It's not just random. As London trends lower, New York reverses for a reason. Using our higher time frame analysis, we can speculate that New York will reverse off of this gap here instead of continue to push lower off of this hourly gap here, which meant people were shorted as we started to move into this gap here once we started to approach 8 AM. Anyway, let's move into the 15 minutes here. As we pushed into that gap here, the speculation that we would run London's liquidity and reverse through it. You can look at 9:30. Notice how we have that drop lower here, touching this gap here, as well as the consequent approachment of the 4-hour gap, which we can see that it respects it beautifully. And then from there, it rushes higher to take out buy side here. Lower time frame setup is up to preference and up to what you feel has worked most for you. But this is just the foundation. This is the base work of where your lower time frame setup will come from. Again, thank you for watching, and be safe.